We have clients from $1 million in annual revenue to firms that are north of $1 billion. This is only possible in GovCon. If you're going to be in this space, you better be relationship oriented, be a value add firms, just because it's a small world out there. You're going to have bills that you need to pay between billing the government and getting paid by the government. And so we can bridge that gap.
Matt Stavish, I'm so grateful that you're here, but because I'm very familiar with Republic Capital Access. You were the vice president, and back in 2013, when we received our first multi-million-dollar contract, I was like, yay! And then 2 days later, the government shut down. And then I was like, how do I pay these people? What do I do? And then that's how I discovered you all. So welcome.
Thank you. Thank you for having us. Yeah, we're a specialty finance company for government contractors. And, we try to help people out and kind of solving that timing issue that the kind of working capital receivables creates in the GovCon space. What's very unique about government contractors, especially on the services side of the house, as you kind of ran into yourself, is it's the only business legitimately where you can triple, quadruple, double your employee count in a week due to a new contract award. That doesn't happen in any other business. And so because of that, very interesting short-term working capital issues are created for government contractors. And, we step in a variety of situations, but, there's some uniqueness in working with the federal government because it is by far the world's most complicated.
It definitely is. And, which in many ways they should be, because it's primarily taxpayer dollars. But how do you help? Because, for those that may be watching, I didn't have any capital. I went from 2 people to almost 10 people overnight. I had no idea about payroll or cash flow. I knew how to provide the services, but I was very new to government contracting at that point. So how do you help?
Yeah. And we help startups that have very little collateral base. And, I think the key thing to keep in mind is, a very simple example for folks, you're going to generate a receivable at the end of the month. And then that receivable is going to get paid 30 days later. And you're going to have bills that you need to pay between billing the government and getting paid by the government. And so we can bridge that gap by financing or purchasing that receivable. And that's really where our product is a lot different than other folks. So you can take a loan against that receivable, which is a loan to the company. So if you don't have a lot of assets or equity, it's very hard to get comfortable. Imagine getting a mortgage against a house that doesn't have built yet, right? It's pretty hard to figure out. So what we do, the way that we look at the world is, you have this really great asset of an invoice, we'll buy it and advance you cash. So we're going to look through you, not your contract. We'll look through your company and go, this is a really great credit over there. We're going to finance that receivable. We're going to give you cash. You'll make your bills. You pay payroll. And so because of that, there's no lien, there's no personal guarantee, there's no covenants, there's no restriction on the use of proceeds because it's a true sale of your assets. So you guys were really small, got this new contract, but you're generating this really great asset class that just happens to disappear every 30 days. And with that, we can buy that receivable and give you cash so that you can pay your folks. So that's really our receivables financing product. The other product that we have, and we didn't have this when we were working with you, is we have an unbilled receivables platform. So if you imagine that window, you started work on March 1st, you're going to bill on April 1st. We'll buy that receivable. Matt, that's super good. You'll buy my receivable on April 1st, but I got 1 or 2 payrolls to make before that. So we will help with that too. It is a loan because there's no invoice, but we'll loan 80% against an earned and billed receivable. So if you today's March 4th, started work March 1st, going to bill them April 1st, you got some payrolls in between you need to cover before you get to that invoice, we can bridge that gap and then fund that corresponding receivable that follows thereafter.
That's amazing. And is it super expensive? Because I know some of the alternatives when you get money quickly, the amount that you pay back is very high. Kind of if you could maybe give an examples, what is an average fee for?
Yeah, it's a really good question. So I'll preface that with saying everyone who's in the finance space specializes in selling a commodity. So this is a commoditized space. And so you can get money from a lot of different places. And I say this for almost every service provider out there selling to a degree a commoditized product. So, where the cost is, I'm not going to dodge your question, we're about 1%. So we're a little more than a bank, a lot less than asset-based lender or non-bank lender in the space. But where we really differentiate ourselves and where the cost becomes not as important to a degree is important, but are you picking up someone that's going to bring a value add in addition to their service that's going to help your company? When you need, like, hey, do you guys know of a good teaming partner? Well, since all our clients are GovCon, we may know to introduce you to. Or you really want an attorney that's really good at particular good protest. We know a bunch of attorneys that do good protest at GovCon because all of our network are service providers. So their cost of capital is important. It's one thing you need to be, vigilant and that sort of thing. But what is that service provider bringing you in addition that's going to help you grow your business, expand your personal Rolodex, that's going to kind of be that value add? Because it is a commodity. You can get your money from a lot of places. You can get a CPA service from a lot of places and other firms. So that's kind of how we look at the world. But on the cost side, about 1% per month. For bigger credits, less, and smaller credits, a little more. So
it's very reasonable. I mean, it's an extremely reasonable rate. And the relationship that you offer, it definitely speaks volumes, because I think we last used your services maybe 2013, 14, 15, something like that. And here it is, many years later, and we're still in contact, which speaks to the value that it's not just like a transactional relationship. Like you said, the fact that you specialize in GovCon, you are really able to help walk people through the process, especially those that are new.
Mm-hmm. And it's a small community, GovCon. And, so many times that you've seen it and we've seen it happen where a COO is at a nice small business and they go off and start their own company, right? And that company was with you, went to a bank, and then they left. And now they need you because they're new and they're not quite ready for a banking relationship. So it's such a small community, and it is a very good, ground for an entrepreneurial kind of set of businesses to be popping up, because the government is a big spender. They do have a small business set aside and in various subcategories of those set aside. So it creates this ecosystem that's small, but there's a lot of opportunity kind of always bubbling up. So you have to be, if you're going to be in this space, you better be relationship oriented to be a value add firms, just because it's a small world out there.
It is a small world out there, and your reputation precedes you. And what's really important is you have to not only win the work, perform the work, you have to pay your team, your contractors, and anyone else involved. Because if you don't, the word's going to spread and the agency may cancel your contract.
They may cancel your contract. You can get terminated. And I think now, and I'm not quite up on all this, but I think that if you are behind someone hasn't paid, you can go to the CO and direct payment. There's some more mechanisms that have been built in there. The great thing about being a government contractor is the government's really good, pretty consistent payer. However, all of you people that you pay know that too. I tell people the worst payment terms in the history of payment terms are paid when paid, because no one really knows what that means. And that in small business, you said a bunch. We'll pay you when we're paid. And more than likely, paid when paid usually gets into a murky and somewhat uncomfortable conversations, because it's like, we know that you've been paid.
Yes.
Because it's been, 45 days or whatever it is. So yeah, there's bills that need to be paid. And the fact that the government is receptive to a degree to those complaints, I think gives a little more onus on the primes who are paying those bills to be receptive and responsive.
Yeah, it definitely does. Sometimes, the government will pay in 15 days, but even though you still have that gap, like you said, you may have a payroll in between. Maybe there's some unexpected expenses. Maybe you need to pay for materials. My expertise is all around services. So I can only imagine for those who are in construction or certain IT NAICS that there's a lot of payments and debt that they have to take on.
Financing in general on the working capital receivable side it's pretty simple. There's a big bright line of when do you start execution on a contract, and then the next bright line is when do you generate a receivable. And in the services space, between execution start and receivable generation, that's an unbilled services. We can do that. That's not too tough to do. But in like the product space, so let's say we've been doing a lot of PPE deals lately. Let's say you're going to do a mask delivery to FEMA or, DHS or whoever it may be, then you need to pay for the mask to be shipped. Well, that's a different type of funding, but it's still before that receivable is generated. And that would be a purchase order finance company. And there's some really good ones out there with those guys and finance to receivable. But it's all about how to, bridge that gap between I start work to I generate the receivable. And then from there, it gets pretty simple. And depending if your services, that's one type of an unbilled need, and product is a different type. And then construction's a whole other bird because it got bonded and all this sort of stuff. It's a puzzle. It's a financing puzzle to solve on how do you kind of make sure that you get capital at various stages in that life cycle of working capital.
Yeah, it is. And it's great that you are there to help with this puzzle because it's not just transactional. Here's quickly how you get the money. You offer so much more than that. What are some of the sizes of the companies that you work with? Do you work, from the small to the large, just kind of the number of employees and or maybe their annual revenue? That would be helpful.
Yeah. So in our portfolio, we have clients from $1 million in annual revenue to firms that are, north of $1 billion. But most of our clients are between 1 and 50 million in annual revenues. And to put that in a monthly, which is easier for most folks to figure out, that's about $1 million, about $100,000 a month to be 1.2 million to, about, $4 or $5 million a month in revenues that would be financed. It's kind of our average client. And then there's some bigger ones in the past that we've had. SRA was a client of ours years ago, as an example, before they became CSRA, GDNT.
Yeah.
But but it's all using the same product. It's just that we were going to buy the receivables and no recourse, no lien, and no covenants. But they all government contract. So, and then we finance a bunch of, so it's hard to put an employee count on there because if you have like SCA contracts, typically you're billing less because you're not charging as much. But if you're got a bunch of software, TS cleared developers, you're billing much more for those folks. And then on the product side of the house, it's kind of the same thing. They're a little bit more lumpier in their revenues because it's more contract or purchase order based, right? Because they may get an order every other month instead of billing like a services firm, you're going to bill every month. And so those kind of get a little more up and down. But yeah, I tell our clients, the limitation to your funding available through us would be your ability to win contracts, not our ability to fund you.
That's
typically the limiting region.
That's good. Your ability to win the contracts, which is great to know because I've come across opportunities. There was one recently for 240 people. And I thought, how in the heck am I going to make that payroll? Because we would go from 50 to 240 like that. But it's great to know that, as well as that your clientele ranges, because I was under the impression it was other businesses my size. And it's great to know that those with $1 billion in revenue are also working with you, which I think speaks again about just how you are, how you operate, and that you're really more of a partner.
Yeah. I mean, those bigger firms use us for different reasons. The smaller firm where they're looking for the SRA, the balance sheet metrics that we were going to generate was positive to the firm. The example that you just said on that big contract, we would give a letter of financial capability for you to include in your bid that we were able to support you if you're going to win it, put in a solicitation number. We've had clients go from 30 to 350 people in a month. And they use our unbilled product to cover the payrolls, and then you generate receivable and kind of away you go. This is only possible in GovCon to have that sort of growth, which is great. Creates all these fun problems to solve. We tell folks all the time, there's 3 things that happen in GovCon. You win a contract, yay, great problem to solve. Or you win a recompete, so you get to slash rates a little bit, but yeah, better than losing it. Or you lose your contract. I mean, generally you get those 3 things. So, the contract ramp up, mobilization, this is a bit stressful, but just enjoy this ride because that 30, 45 day window working with business owners is a lot of fun.
Yeah, and it truly is. I mean, I remember it was like yesterday when I won that work. Mm-hmm. We're still working with them.
Yeah.
I mean, it's amazing. It's amazing. And so it's nice to have that that comfort of, okay, if someone doesn't have that cash flow, that they can work with you, because the objective is to win. And for many, the objective is to go from 35 employees to 335.
Mm-hmm.
Wonder, how am I going to make payroll? And then people, your colleagues may not know how to answer. They don't want to tell you that they work with someone like you, Matt. And so it's great that, you're here today to just share what you offer.
Well, and I think that's where, we've bridged that gap, like we have this chart that we show when we do financing presentations. Bank capital is the cheapest. A lot of people win that big mega contract like we're talking about. They think we need to go get a bank to fund it. And the problem is that they're regulated. And so, they are the cheapest form of capital. But when that growth doesn't fit that credit box, right, or the need of capital is outside the equity you have in the company because you just grew so much, right, that doesn't fit their box. And so all that we're doing is stepping in for the time period that's needed. And typically, the new contract when it may be, 12 to 24 months to give you that financial support. And then if you choose to go to a bank, you are going to hit their metrics to be bankable. Look at interest rates now, like bank financing is so cheap. You do need to have certain qualifications to get it. They don't make a lot. If you look how banks make, they don't make a lot of money on loans. So you got to give them a break. If it doesn't fit their box, they can't take the $1 million risk to only make a couple, $10,000. So that's where we fit in, and to kind of bridge that gap, help people get over that next step and that next hurdle on their growth. And then we've had situations where people are at a bank, they come to us, they win new contracts, they do great, they go back to the bank, and then they come back to us when that's happened many times. So we're kind of that bridge to be that solution provider on that journey for the business owner.
And how does someone get in contact with you, or if they're like, oh my gosh, I need this today? Like, what should they do?
Well, we always say that today need should have been yesterday's. There's a lot of finish lines in life that are good at running across, like if you're running a race, right? But the financing finish line, we want to walk across that. It's not good for your health or our health to run across that finish line. So we try to encourage walking across the financing finish line. A lot of easy ways to get in touch with us. We get message on LinkedIn. We have a contact form on our website. Emails. I get like random text messages on my phone. Like, oh, we got my earphone with so we talk for sure. So, we try to get back to people in about an hour and set up a meeting to talk with them, sometime that week. But yeah, plan a little bit. We tell business owners, and if you're like with us in a bank, that's great. You should do that. But just be prepared to run a parallel path. Because until you sign those documents, right? Let's say you need funding on April 1st, Kizzy, and you're talking to us in a bank. We're like, that's great. You should do that. Like, it's cheaper than us. But here's the deal. Until you sign the documents with them, if you come to me on March 20th and say, I need funding in 5 days for payroll, this would have been super simple to just, hey, let's run a parallel path. Let's just get the documents in place, just sit over here and do that. And as opposed to kind of like, I talk to all the banks in the area and, we talk to you and we see it's too stressful. Like, and you shouldn't be stressing out that.
Oh.
Like, we try to encourage, if you think that you're going to be bankable, that's okay. They're going to just be prepared. If they don't get it, that we're ready to go. I mean, it's just, and then when you need funding overnight, then you kind of get into the merchant cash advance, the online lender type model. And there's a fit for that. I mean, to be clear, there's some good people it's expensive because it's risky. And it's not expensive because it's not risky, right? They've all run their algorithms and it is risky. So, there's a fit for that if the business owner is very judicious with use capital and how they're going to pay it back. But typically for a government services company, the structure of those deals are not, ideal.
No. And you ultimately, the small business owner is going to pay a lot to get the money because they need it now. Mm-hmm. And you get in this cycle. It's almost like a cash advance. You just get in a cycle, and I speak from experience. I feel as if we have taken out money from every possible source that ever existed. We're not doing that anymore, thankfully. But there was a time, and then you get in this cycle, and every month it's like, oh my gosh, I have to repay how much, and how much is coming in, and then it's horrible. And so just taking that time, like you said, to understand that you gotta do this a little early, and it may not seem like it, but earlier is better than I need it now. I don't care if it's 30% interest.
Yeah, earlier is better. And talking with, either a firm like ourselves or a bank before you have the win, everyone will take the meeting. So, that's the biggest thing to folks is like people will take the call in the meeting and you go ahead. I got this contract and it may happen in July. And if it does, I need to find a couple people that I can call in April to start having those conversations with, to get a proposal out. We'll give a proposal to a company like, hey, you don't need us now, but you need us if this happens in July. So here's your proposal just in case. And that, even with a bank, have those conversations now, looking around the corner and talking to your banker if you got a bank line of credit to discuss, this is what may happen in a couple months. That is a great thing to do for your business. And so, and I know the financing puzzle is one piece of the GovCon puzzle. There's a lot of other things that owners are worried about, but having those kind of look around the corner conversations with the provider is a great use of time and is a great stress reducer for the business. Being overly communicative to try and get that stuff in place is just going to make it easier. But we've talked to companies like, I'm going to go after such and such. You'd be like, yeah, that's really hard to find, like for anybody. And they'll be like, well, what do you mean? I'm like, well, and then we got to go through it, make things fine. I was like, just consider it. But anyway, having those we talked to a startup 2 days ago and it's like, don't have any work, going after this contract, we may drop in May. Okay, let's talk through it. Yeah, that's a very reasonable thing to do.
Yeah, it's smart to do that now instead of May 1st. We need money May 4th. So,
very stressful.
So before we end, what other, kind of advice or tidbit would you like to leave with the audience, especially those who are like, hey, I may need this. I don't know if I need it.
I would say, there's multiple things kind of happening right now in GovCon that people should kind of be aware of. One is, the PPP program, talk to your attorneys and CPAs about it. There is some articles and thought leaders out there that have talked about if you have cost plus or T&M contracts and you took a PPP loan and you went for forgiveness, you should be having conversations with your CPA and attorneys from what I've read, and I'm neither. So that's happening now, and people should be thinking about what that is or isn't for their particular business. FFP contracts, from what I've read, you should still have the conversation. So I think GovCons, because most smaller GovCons just take PPP, have those conversations with your kind of those key service providers in that group just to make sure that you're all buttoned up on whatever it may be. And if you have to take action, at least you're doing it proactively. And then I would say, as you're looking to plan the year, because right now we're kind of an RFP season for GovCon, right? You're thinking about what you're going to apply for or go after. It's not too early to talk to your banker or your finance provider or reach out to somebody. Hey, this may happen. What are your thoughts? Could you be helpful here? And now you've just checked off a box that you don't have to check off down. Because the financing markets are kind of changing. We're living 51 weeks ago, the world stopped, right? We're coming up on the anniversary week from tomorrow. So the markets are a little bit different than they were. Even though cost of capital is lower, the credit boxes at like the regulated institutions are different. So just have those conversations now to start planning in your head. Oh, this is who I'm going to call if this happens. They can do this, but they can't do that. So I just say plan to be digital, not vigilant. Like we talked about earlier, make sure in GovCon, whomever you're working with on the financing side, majors in your major, because this is the only business with a very complicated customer. In the bank sector, it's a little bit easier. But in the non-bank sector, people do assignments of claims. You need to work with people that really know your business and speak in those weird acronym-based sentences that all GovCons do.
Yes, that is great advice because they need to know your business. They need to speak your language. And I can't thank you enough, Matt, for being on here. How can people find you online? Where should they go to connect with you virtually? You
can go to me on LinkedIn, this Matt Stavish, find me Republic Capital Access, or go to Republic Capital Access's website, fill out a contact form, and it will come right to me. It's probably the easiest way to do it for people that are listening. So, or you can to my email or cell phone. We'll get back to one way or the other. So
yes, he definitely will get back to you. That's the best part. If he's very responsive, which speaks volumes to who they are as a company. So thank you again for being on, and thank you all for viewing and listening.